Hello and welcome to the Chapter 2 video lecture. Let's start with a dad joke. What do you call a fish with no eye? Fish. Get it? Okay, so we're going to talk about Chapter 2. A lot of this is pretty basic stuff, right? It's an overview of how the individual income tax, taxable income is calculated. We're going to walk through a lot of forms. I am going to spend quite a bit of time talking about the child tax credit. That's because the child tax credit was actually changed for 2021, and it's different than it is for 2020 and 2022. So I want to make sure you get some details on the 21 version. Not that it exists anymore, like technically after this year it won't, but it was part of the most recent Biden administration bills that touched on taxes. So the chances of there being some form or structure of the existing one being extended is, I don't want to say pretty likely. It's hard to know what's going to happen in Washington today. The other thing we'll spend some time on is the kiddie tax, because that tends to be a little bit painful. A lot of the other stuff's pretty straightforward, though. So without further, let's get going. Okay, let's get started talking about determination of tax. So there's a few terms. These are what I describe as magical tax terms, meaning they have a special tax meaning. So let's start with recognized. Recognized means that the income or the deduction is reported on a tax return and therefore becomes part of taxable income. So again, simple definition. Gross income is income that is recognized. So we need to recognize income for it to be gross income. Excluded means it's income that's not part of gross income. So we're going to exclude that income. That'd be like tax exempt interest. Adjusted gross income is kind of this baseline subtotal, and it only appears on individual income tax returns in the U.S. And the reason it's there is because a lot of other deductions are based on the ability to pay, and adjusted gross income is like a hash total that we can use to measure ability to pay. So you'll see AGI, or adjusted gross income. That's going to appear over and over and over again. And we'll talk about adjustments for AGI and adjustments from AGI. Deductions for AGI. In fact, let's talk about them now. Those are deductions that appear to get to AGI. So they're above the line is the kind of way that's described, AGI being the line. And then deductions from AGI are any deductions that occur after adjusted gross income. And in all basic terms, that's either the standard deduction or itemized deductions, whichever is larger, or the qualified business income deduction. And again, QBI deduction, qualified business income, that's around until 2025 and then is scheduled to expire. Taxable income is the amount of income that's actually subject to tax. So that's kind of that baseline measure. When we think about a tax is rate times base, for income tax, taxable income is the base. Okay, so here's the individual income tax formula. Pretty basic. You start with total income, then you back out any exclusions. That gets you to this gross income. And actually, there's actually on the tax return, there's a total for total gross income. It's just a total line. It's not really used much anywhere else. There are a handful of things that rely on gross income as opposed to AGI. Then you get deductions for AGI, and we'll talk about what some of those are, but we'll spend significantly more time on them in detail later on in the course. That brings us to AGI, again, adjusted gross income. Then you have those from AGI deductions, which, as I just mentioned, the itemized or standard deduction. Then the QBI deduction, that gets you to taxable income. To that, you would apply your rate. You'd get what we would call the pre-credit income tax. So that's kind of your baseline tax. But then our tax code offers a number of credits. This is both business and personal. But there are a number of personal credits, child tax credit, child and dependent care credit being amongst the more popular ones. So you apply those credits, those are a reduction of the tax. There's a few special taxes that are incurred and are reported as part of the income tax process. So for example, self-employment taxes. How about, let's see, what's another? The net investment income tax. These are taxes that aren't part of the base income tax, but are reported on an individual tax return. So we'll have to spend some time on those. Then we deduct from that net amount, so we get this kind of post-credit tax amount. Then we apply our payments. And then the filing process in the United States is really just a truing up, right? So we measure all the payments we've made against the actual tax due, and we either owe money or we're getting a refund back. And that's the due to, due from. That's the kind of conclusion of the filing process. So here's what the top half of a Form 1040. There's really only currently two forms that you can use to file an income tax return, a 1040 and a 1040 SR, which is for seniors. The 1040 SR was created by the Trump administration. Honestly, there's not a single bit of difference, except the type is bigger and it's more pages. Otherwise, everything is basically the same. They do give a little more disclosure about the standard deduction amounts, and we'll talk about why that's true when we talk about standard deductions. So the top half is really just informational, right? Name, social security number or tax ID, address. You see there's a checkbox for virtual currency. The IRS is definitely tracking, taxpayers' behavior with respect to virtual currency because it's so new and the rules are pretty naive still. So they're trying to figure out how to deal with it. Then if someone can claim you as a dependent, you're required to check that box. And again, we'll talk about dependency in a little bit. And then there's some boxes for age or blindness. Again, that's part of the standard deduction. And then you list out any dependents you have. The same thing, we will talk about what a dependent is. So that's really just informational. We don't get to the money part until we get to the bottom half of page 1. And the 1040, these 15 lines, if you will, some are A and B, so you can't really say 15 lines, but these 15 lines are where you basically report every bit of income in deduction. And this is really a summary. I like to think of this as the parent schedule, because what happens is there are a number of supplemental schedules that will feed into this schedule. So let me give you an example. If you look, lines 2A and 3A, it says over on the left, attach Schedule B if required. So if you have taxable interest or ordinary dividends of over $1,500, you're actually required to attach a Schedule B that provides the detail of your interest and dividends. If you go down a little bit to line 7, capital gains and losses, attach Schedule D if required. Again, there's another supplemental schedule that feeds into this top parent 1040 schedule. Whereas some items, they're reported directly here. Line 1, wages, salaries, and tips. All the wages, salaries, and tips from all your W-2s, and if you're married filing joint, for example, your spouse's W-2s, those are reported on line 1. There's no supplemental schedule for reporting wages. So you go through and report wages, interest, dividends, distributions out of your retirement plans or Social Security, capital gains and losses. Line 8, you'll see, comes from Schedule 1. So Schedule 1 is a detailed schedule of a bunch of other income sources. And we'll take a look at Schedule 1 here shortly. Total all that up, there's your total income. Remember I mentioned there was kind of a total gross income line? Well, that's it. Line 9 is that. Then there are adjustments to income that come from Schedule 1 also. And Schedule 1 is the 4 AGI deductions. Now, it's not all of them. Some of them are picked up on some of the other supplemental schedules. We'll see that as we work our way through. But a bunch of them come from Schedule 1, and we'll look at that in a second. Then you get to AGI, right? Line 11, this is your adjusted gross income. That's right. Then you have your from AGI deductions, the standard deduction or itemized deduction, whichever is better. And for convenience, they just give those amounts for the standard deduction over in the left margin. If you're taking itemized deductions, look, it says from Schedule A. There's another supplemental schedule where you would provide the detail of those items to report them in summary up to the 1040. Charitable contributions is potentially the end of a 2-year cycle. During COVID, they allowed people who took the standard deduction to take a very small charitable contribution as well for cash contributions. We'll talk about what that is when we get to itemized deductions. It is unlikely you will see that in 2022. I just don't see that persisting, but never say never. Then you just total those up to get your kind of total standard or itemized deductions. Then you got qualified business income deduction, the QBI deduction, which we mentioned, another 4. Add those together and you get your from AGI deduction total. Reduce your AGI, you get to taxable income. So then you take that taxable income and we'll work on calculating the tax, but we're just not there yet. So you can see that the 1040 is linked to a lot of different schedules. So let's go out and just take a quick glance over some of those schedules just so you've seen them before.